in other news, the world is getting hotter, literally, in terms of temperature rises, with 2011 one of the warmest years on record, and humans are to blame. This is according to a report released by the World Meteorological Organization. It warned that increasing global average temperatures were expected to amplify flooding, droughts and other extreme weather patterns. We're joined now from the world's corporate agenda, or talking about the world's corporate agenda at COP17, is Madeleine Ronquest, who's head of environmental and social risk management at FirstRand. Madeleine, thanks for your time. So the summit is effectively in its second day. What are the deliberations focusing on?
Well, I'm not sure what they're focusing on at the moment, but they're just starting off. I think they headed off on a good start. So we're looking forward to the next couple of days to see what comes out of it.
I mean, obviously the big issue is getting commitment on carbon emissions and reductions. It's getting commitments from government, but it's also getting consensus with business. There's been a sense that business hasn't really come to the party. Is that going to change?
I think it has already changed. This year we saw a CEO forum being formed, and CEOs of large companies and also the largest emitters in South Africa came together, and they talked quite seriously about how greenhouse gas emissions is going to impact, or reduction really, is going to impact on their business, and how important it has become for them, especially in South Africa because we're looking at carbon tax legislation. So it's going to have an impact on the bottom line for companies. So CEO Forum has formed, and they created a platform for discussion with government to come up with solutions.
What would those solutions mean on the bottom line, Madeleine? Because already we're told that the pricing of pollutants and the levies has reduced from 30 euros a tonne to 3 euros a tonne, and even that figure, business doesn't quite have a consensus on it. So as we start talking about how you price pollution risk, what's being said? What figures are being bandied about realistically?
Well, it's not just about that. It's also about energy efficiency and cutting down your own emission, and that makes absolute financial sense. It's proven that if you become more energy efficient and you reduce your own emissions, that it actually impacts quite positively on the bottom line.
All right, business and its participation, we're talking about carbon taxes, but there's also a green fund that's looking for sponsorship of $100 billion per annum. Is business going to be the source for some of this financing?
I think business is willing to come to the party, and of course it will be conditional. And we are hosting with the United Nations Environment Programme for Finance Institutions a side event to talk exactly about that, how the financial sector can activate and mobilize funding and get it into the business to mitigate and adapt to climate change.
How much attention is being paid to things like carbon markets? Because we are told that's one dimension that could support the sponsorship of a green economy in future.
I think a lot of attention is given to it. It's a very new market in South Africa, but we are looking at that quite intensively because it's right. I mean, that could be quite an income generator for the Green Climate Fund.
All right, other areas of partnership, Madeleine, we're looking at co-generation agreements with some of the big industrials here in South Africa. We've already seen 6 or 7 signing up with the government in South Africa, but many more companies need to come to the fore. What other innovations can we start seeing?
Well, I think the companies in South Africa are quite innovative. They're spending a lot of money on research and development, and well, large emitters have already shown us quite a lot of initiatives. And I think that smaller companies are also coming up with some nice ideas. What we also have to remember is that climate change does not only pose a risk, but a lot of opportunity. And especially in the financial sector, we're looking at the opportunities and helping our clients adapt to the challenges of climate change.
What about funding new initiatives, for instance, in the alternative and renewable space? We're hearing that we are going to add a significant component to our energy mix. So the launch of wind farms, the launch of solar energy sources, those sorts of things, independent power producers. They've often said that finding credit is going to be a major challenge. Is it?
I don't think that it is, no. And we're moving towards a solution Our refit program is getting off the ground. We recently entered into the government's tender process on behalf of some of our clients. So we're looking forward to the awarding of those tenders, and I think we'll be moving forward on renewable energy quite soon. FirstRand has set up a renewable energy finance unit, and they're doing things slightly differently where they take equity. So they're taking quite a stake in the development of renewable energy, which I think is very important to our country.
At the end of the day, though, Madeleine, in as much as we may be conscientious, we've also got to be profit-minded, because these companies will have to account to shareholders. Where is the benefit for investing in this sector? Before we talk about the broader social benefits, what's the mathematics tell you?
Well, there's definitely a return on investment. Otherwise, the financial institutions wouldn't finance it. So if we didn't think that there was a business case, we certainly wouldn't finance it. And I think the guarantee for us would be the signed agreements, the power purchase agreements with independent power producers. And I think it makes sense. It makes financial sense. It places electricity back onto the grid, and it helps our country.